Good morning. Welcome back to the Retirement Report. I'm Hank Parrott, your host. With me, my special guest, Chip Kandrak with Gateway Mortgage. Chip is a reverse mortgage specialist with them. One of the things that we wanted, that we're getting into a little bit this morning about reverse mortgage, I wanted to give you an update because the reverse mortgages rules have changed. Now, you see commercials all the time. There have been a number of celebrities. Fred Thompson, before he passed, was one that did one. What's his...
Henry Winkler.
Henry Winkler, thank you. Henry Winkler does another one. And you may wonder, well, what is this reverse mortgage thing all about? And as I mentioned before the break, I've used reverse mortgages with clients in certain situations. I mentioned one being with failing health. Another is a situation where maybe we're trying to sell a house, okay? And this was one we ran into not too long ago. Trying to sell the house. Needed some extra cash, was running short. Now, once we sold the house, it was going to be a downside situation. So we're looking again. This was where got a lot of equity. It was a home with acreage, so they had a lot of equity in it. They were going to downsize into a smaller home with less maintenance worries and that type of thing, and they were going to free up a large amount of cash that they would be able to add to the retirement capital and use that for income in retirement. The problem was we were getting into a cash crunch because the house hadn't, we hadn't sold the house yet. So I said, well, if we get right down to it, what we can do is we do a reverse mortgage. You're over 62, we can get the reverse mortgage, we can get a little cash out to get us through the point to where the house is sold, then we pay it off, and we go ahead with our plan as we originally intended. Now, one of the things that's changed there, used to be at that time we were able to do, if you were 62, it was pretty much about it. All you had to do was be 62, and you could access a certain amount of cash, and you didn't have to take all of it. So let's say if you right now it's 62%, approximately 60% that you might have had available to you. You don't have to take the whole 60 out right then, and that was a real big benefit. It was like a credit line that was set aside for you that you could use. You could take it as either payments, if you just a monthly amount. And so, Chip, this is one of the things. Now, there's been some little differences now. So when it comes to, first of all, you didn't have a credit check at all before.
Right.
Now this has to do with more showing an ability to pay that property insurance and taxes?
Oh, exactly right. They want to make sure that you have a history. In fact, one of the requirements is we check your history of paying your taxes, if you paid them on time for the last few years.
So that's really what the credit check part is?
Right, well, that's part of it. We have, beyond that, there's not a credit score per se. Most lenders will tell you certain scores equal certain credit. Right. There's not a score per se, but they want to check that your ability and your desire to pay your bills on time is there.
Is there a particular credit score that might disqualify you?
No, not at this time. This is a thing in a flux, a state of flux, right. So it may change at some point. Where they just want to make sure. Do they find it's a pretty easy process then, for the most part? It is a pretty easy process.
Let's say relative to what you might need for a
easier than a standard credit check. That's exactly right. And the main part is this: after you've paid your bills at the end of the month, is there residual money in your account? After you pay your taxes and your insurance, after you budgeted for that, after you paid your credit card, like your car payment and all the things that show up on a credit report, is there residual money? So for a couple in the Southeast, like we are, if you were a married couple in the Southeast, they require you to have $866 left over after all those things are paid.
So you're needing to show a positive cash flow now as a part of this credit check. For the purposes we were just talking about as far as taxes and insurance.
Correct.
So there again, this is another area that has changed over what it was before, and why it's so important. If this is something you're considering, why it's important to do an analysis of your given situation and see if this is something that really makes sense for you. Here's an area, there was, let's see if I've got it. When it comes to reverse mortgage, one of the things that we get into, an understanding, when I talk about tax planning and, as a part of doing up a financial plan, so when we do the retirement income analysis, tax planning is a big part of that. And housing, this is one of the arguments that has long been used about why it's okay to carry a mortgage. One is that you have that tax advantage, that you're able to write off the mortgage interest, assuming that you can itemize that you've got other expenses that would take you above your standard deduction. So this is one of the areas, though, that you've got to look at. And it's the same with investments. Sometimes people are holding on to investments because they're they're concerned about the taxes, let's say, on it. If I sell it, I'm going to have capital gains taxes, and depending on my tax bracket, that could be as high as 20%. All right, but this is another area to look at it. We prune if you will, meaning we sell off all the time for clients. We're, sometimes taking money off of the table, that is, taking some gains. And if they're in a 10 or 15% tax bracket, we may take enough just to keep them in that bracket so that they have no tax, to pay. That's a zero capital gain. Or if they're in a higher tax bracket at 25% or so, maybe we take a little bit more and you're paying 15% tax. That 20% is only on the highest bracket. So at 15% tax, that's still a relatively low tax on that. And here's the other part of it. If there's a chance that you could take a drop in money, that those stocks could go down in value, all right, now you got to consider, well, for every dollar that goes down, of what value? I'm not trading dollars for quarters, or for 10 or 15 cents, give up a dollar just to get to earn 10 or to save 10 or 15 cents on taxes. Not a good plan. In fact, if anything, I want the opposite. I want to be able to give a quarter and get a dollar. And that's what we do when we do your analysis. We show you how to get dollars for your quarters rather than spending dollars and ending up just saving pennies on those dollars. So if you want to take advantage of that retirement income analysis to get in to see me and do a complete analysis for you, just be one of the first 10 callers this week, 615-376-5325. That's my office. Debbie's there. She'll get your information. She'll send you out a checklist of things to bring to the appointment, and she will also send you a free copy of my book, 7 Steps to Financial Freedom in Retirement. Deals with all the kind of things that we're going to help you with. Tax planning, how to get the most out of your Social Security, how to get the most out of your investments with the least amount of risk. And there, yes, you can earn 4 and 5% very safely and more, but it's, again, understanding how the rules work. There are safe, guaranteed type ways to invest, and there are also smart. If you're going to be in the market, I'm going to show you how the smart money invests. So again, 615-376-5325. Now, one of the areas then we'll get into with that is about mortgages. We'll take a look at housing costs. How can we reduce housing costs in retirement or even prior to retirement? Should you pay off your mortgage? What kind of interest, and it's another, should you refinance? What's your situation there? How much are you paying now? When interest rates are at historic lows, we have a unique opportunity that is probably about to go away. All right? Everyone is, all the analysts and everything, if you're listening at all, you're knowing that they've been, the Federal Reserve has been talking for actually more than months, probably now for a couple of years, about raising rates and normalizing, stabilizing rates. So one of the things that they're looking at in their December meeting coming up is probably starting that with the first raise. In fact, it'll be a big surprise if they don't at this point start that process. Now, once they start, the goal would then be to maintain and continue to have increases throughout next year as well. So we'll see what happens there. This is one of those areas. It's very difficult. They may start the process and then get nervous if it has a really super negative effect on the economy. What you have to be thinking about in terms of, why wait to find out? If they do continue to go, then you're going to miss out on a tremendous potential opportunity. So if housing is one of those areas that you've been meaning to look at and you haven't addressed it already, this is that time to do so. Now, when it comes to reverse mortgages, we were talking about conventional mortgages. Chip, what is the difference, let's say, reverse mortgage in terms of the processing is we've talked about some of the things in terms of credit checks a lot easier. You've got to be 62, which of course wouldn't be a requirement otherwise. What other things in terms of the way that you're able to access? We said that you're limited to, say, 50 to 65% range in terms of how much you're going to access of that principal or of that equity. But it also limits how you can access it, right?
Well, actually, it's unlimited. There are several ways. There's a thing called a tenure payment where you figure out how much, like an annuity, you figure out how much you qualify and we pay you a certain amount a month for the rest of your life as long as you live in that home. That's a tenured payment. Also, the good thing about that tenured payment is there's always an emergency fund built in to that. So let's say you do a reverse mortgage and you get a certain amount of money per month and you're going along just fine and all of a sudden you need a new roof.
Right.
Well, there's an emergency fund built in there. We can wire you the money to fix the roof. They'll recalculate the numbers.
Your monthly payment.
Right, and then you'll still get a monthly payment. It'll be less than you were making before you bought the roof.
Okay. And this is one of the areas you want to look at. One of the things about reverse mortgages is how you act. If this is something that would fit for you, it's how it would fit for you and how you use it. Again, knowing how the rules work and doing an analysis of, do I take a lump sum part? Do I take it in payments? What's the interest impact when I do it that way? These are all some of the questions that need to be answered, and there's others as well. If I needed lump sum, I'm going to be reducing it, so I'm getting payments as opposed to making payments. But again, as we talked about, you still got to be able to pay those taxes and insurance. So there's a lot involved when it comes to reverse mortgages to understand them and not get into something and then find out after the fact, oops, you know, this was something maybe it wasn't such a good idea. And then the other is, if you're looking at them, why not find out in advance? If it's something that's really good, then, you know, to go into it with the right, with knowing the right information and making sure it's the right decision for you. We're going to get into some more about that, as well as traditional mortgages and housing in general when it comes to how to reduce that housing cost in retirement. So join us here. We're going to be right back on the Retirement Report.